Street analysts have coined a new term called the taco trade. They're saying Trump always chickens out on your tariff threats, and that's why markets are higher this week. What's your response to that?
6 months ago, this country was stone cold dead. We had a dead country. We had a country people didn't think it was going to survive, and you ask a nasty question like that. It's called negotiation.
President Trump there unhappy about being asked about the so-called taco trade. So will he fight or stand down after a federal court struck down his Liberation Day tariffs? Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. U.S. assets getting a boost as a court declares most of President Trump's global tariffs illegal. The administration now set to appeal that block on a key pillar of the president's economic agenda. Nvidia's results also boosting market sentiment, soothing fears over a China slowdown with a solid sales forecast.
Well, we got a whole bunch of engines firing right now. The biggest one, of course, is the reasoning AI inference. The demand is just off the charts. You see the popularity of all these AI services now.
Also coming up, the Trump team steps up its attacks on foreigners attending U.S. universities with plans to start aggressively revoking visas for Chinese students. We'll assess the market and economic impacts of these rapid-fire developments with Goldman Sachs Chief APAC Equity Strategist Tim Mo and Cornell University Trade and Economics Professor Eswar Prasad. Let's get to our top story. Judges with the U.S. Court of International Trade have blocked most of President Trump's sweeping global tariffs, ruling them illegal in the biggest blow yet to its economic agenda. The order suspends levies, including Trump's global flat tariff, higher rates on China and others, as well as fentanyl-related charges on China, Canada, as well as Mexico. The court ruled Trump exceeded his authority under the International Emergency Economic Powers Act to justify global tariffs. The White House is appealing the ruling, and the Supreme Court may ultimately have the final say. Now, markets are somewhat celebrating, along with Nvidia's upbeat outlook also boosting sentiment. But some argue the recent bounce in the dollar and U.S. stocks will be short-lived. Avril Hongs is here with the very latest. Well, it does seem a bit of a party, a bit of a relief, but for how long, Avril?
Yeah, good question. I mean, there's a celebration underway, especially for stock bulls, right? But to your point, there is still some legal uncertainty. There is the Trump administration saying that they'll appeal this, along with this being an administration that has a history of ignoring some court rulings. So adding to that uncertainty there. But for now, I think investors are running with the idea that this is a body blow to Trump's tariff and economic agenda. You see how futures are surging, especially for the NASDAQ that's building on the momentum from earlier following Nvidia earnings. Solid, but not spectacular. But I think what was key was how it showed it's able to offset partially the loss of the China businesses from growth elsewhere. And that seems to also have been enough to fire up Asia stocks. Now flip the board for a bit more context. Take a look at US stocks. They're headed for their best month since late 2023. And against this backdrop, though, to your point about how long this can be sustained, keep in mind that these headlines coming in on student visas getting revoked just adds to the sense of US-China angst. And it's also not quite clear the extent in which markets have already priced in the tariff relief and the so-called taco trade, and they're not helping also this backdrop of concerns about yields. Now for the dollar, we're seeing the Bloomberg Dollar Index climbing for a third session, but to see these gains sustained, it needs to show that the court ruling is providing sustained relief, not lot more political whiplash, Haas.
That's right. Doesn't necessarily change the trajectory for the dollar. Avril Hong, thank you so much for that. Let's get insights on what the latest tariff developments could mean for global trade and financial markets. Eswar Prasad is Professor of International Trade and Economics at Cornell University. He was previously head of the IMF's China division. And joining me in the studio, Tim Mo, Chief Asia Pacific Regional Equity Strategist at Goldman Sachs. Let's start with you, Tim. I mean, we know that tariffs have been the biggest bugbear for the markets. I mean, this seems to be a positive.
Well, sure. At face value, it is positive, and obviously the futures, as was just described, are reflecting that. But I think it's also important, as I think you mentioned in your opening comments, that this might be considered a body blow, but it's not the final rendering. And specifically, there are a number of other substitute acts that the Trump administration could employ to maintain tariffs. And just to rattle a few off, Section 122 is one that could be employed, which could impose tariffs to an additional degree. Section 232 is still underway, which is separate from what has just been blocked under the IEPA ones. You've got Section 301 investigations, which could be launched on a more broad-based basis. It would take some time, but those could be used to fill things in. And then you've actually got Section 338 under the 1930 Trade Act, which could be used to impose tariffs of up to 50%. So, you know, the number of other tools that could be employed, and of course, the Trump administration has already filed filed to oppose the court ruling, which also may mean that it goes up to the Supreme Court. So I think it's still a bit of drama that has to go. We have to go through. And the other point I'd make is that with the S&P and other global markets having rallied well over 20% from the lows in early April 7th for the S&P, April 9th for the MSCI Asia Pacific ex-Japan Index, a lot of optimism has already been priced in. So I think we have to say this is a fundamentally constructive development from the standpoint of lowering tariff risk, but not all the risk is off the table, and markets have well priced that. So I think we just need to be somewhat more balanced in our euphoria.
So, Eswar, it does seem like we have to wait and see how this plays out, but at first glance, it does seem like it is good news for global trade and global growth. Is that a fair assessment?
So we're not quite out of the Trump tariff woods yet. But certainly, one of the key policy levers that the Trump administration has been using, which is basically the aggressive wielding of executive power under the Emergency Powers Act, that has been significantly restricted by this court ruling. Now, as Timothy just pointed out, there are other ways that the administration can impose tariffs, but it is really Congress that has the authority to impose tariffs, and then the executive branch, led by the president, gets to implement them. But what we have here is an overturning of that, with the executive branch essentially determining the tariffs and then implementing them with no approval from Congress. And there is also a due process, including some of the particular measures that Timothy mentioned that could be used to levy tariffs against other countries, but there is a process behind it, and certainly that would take a lot more time. So what has been stopped at the moment is this very aggressive use of unilateral executive power on an emergency basis. So I think there is a lot more action on the tariff front to come, and the uncertainty certainly has not been completely dissipated, but it has certainly been diminished by the court ruling.
But Eswar, you got to wonder, as it stands now, with the court ruling, how will this play out? How will it be implemented? How will it be looking in the next several days and weeks and months?
The question is what the Trump administration is going to do in order to make sure that its objectives are satisfied while perhaps skirting around the court's ruling. I suspect the Trump administration will not directly contravene the court ruling, but there are other ways to make it much harder for goods and services to cross national borders, a variety of other non-tariff barriers that can be used in order to restrict trade, and I suspect we will see a whole bevy of those measures coming into place. And we should also remember that the U.S. Congress is in the hands of the Republicans, and it doesn't look like Congress is really going to use its authority to serve in its checks and balances role against the Trump administration. But all of that takes time. So in the interim, I think we will see the Trump administration using other measures to restrict trade while it applies pressure on Congress and works through the regular due process approach in order to get the tariffs back on to some extent.
You know, Tim, you got to wonder how much has changed with this ruling. We saw, for instance, the dollar rising. It doesn't necessarily change the trajectory of the dollar going forward, right? I mean, people say it's set to go weaker from here. That will continue.
We would definitely agree with that. We've just published on this again, and we've been publishing on the dollar quite frequently recently. I think is one of the key issues for markets globally is a structural change in the trajectory of the dollar. The relief rally we've seen in response to the news, which you just mentioned, is, I think, expected. I mean, to contextualize things, the DXY, if you take that broad measure of the dollar, it peaked in January at 110 in round numbers, and it just broke down through 99. It's now backed up to 102. So after you have a 10, 11% move in a currency, it's perfectly normal from a trading perspective to see things rebound somewhat. So I wouldn't read too much into this as a broad directional change. To your question, the very strong view that we have is that the dollar is starting from a position of being structurally overvalued by about 15 or more % on two different types of models that we have that calculate fair value. Now, currencies can deviate from fair value for long periods of time, so you need a catalyst. The catalyst seems to be a couple of things. One, the Trump administration is clearly signaling that they would like a weaker dollar, so you've got U.S. policy pushing that direction. You've also got an environment year to date, even with the S&P rally, of the S&P underperforming Europe and China and some other parts of the world. So you're seeing just a natural leveling out of relative performance, which can then direct money flows, not just purely into the U.S. dollar and U.S. assets, but elsewhere. So, and there's some other repatriation issues, which we've seen with accumulated offshore U.S. dollar balances. In the case of Taiwan, we had a record move, biggest move in 40 years in Taiwan dollar about 3 weeks ago. So there's a number of accumulated pressures which now have a bit of a catalyst to sort of get that train in motion. And so we think the dollar will continue to depreciate on a trended basis from here.
And as well, in terms of how much has changed in terms of, you know, negotiations on trade, I mean, we know the U.S. is currently in negotiations with several countries, in fact, dozens of countries. This ruling will not change that, I would imagine.
Now, certainly, the Trump administration is going to be under some pressure right now because it was trying to deal from a position of strength where it was arguing that the damages that tariffs inflicted on other economies were much greater than on the U.S. economy, and that it was a tool that could bring trading partners to the table so that the Trump administration could get its way with trading partners on a broad range of issues, not just on issues related to trade deficits, but their currency policies and policies related to a variety of other issues, including subsidies they may give to their own manufacturers, and even, of course, the shipments of illicit drugs through illicit channels, of course, illegal immigration, and so on. So this is going to make it a lot harder for the Trump administration to push through what it has been trying to achieve. I do want to make one point about the dollar in response to your previous question. Now, certainly, it is interesting to note that every time Trump announces a tariff-related policy, markets don't do well, the dollar falls, and every time one of those policies is blocked or reversed or temporarily put on hold, then the markets rally, the dollar rallies. Certainly, there are reasons to expect the dollar to weaken, but it's worth keeping in mind that if you go back about 3 or 4 months from where Tim started off, which is January 2025, if you think about September 2024, at the time the U.S. economy was doing very well relative to the rest of the world, the dollar went up by about 10 to 11% on a trade-weighted basis by January. So right now, where the dollar is basically where it was in September 2024. So certainly the narrative that something fundamental has shifted in terms of the dollar's trajectory, it's not quite obvious yet. If one looks at just the last 3 months, certainly there are some indications of that. But the reality is that the world really needs the dollar simply because there isn't very much of an alternative. And we're going to see some cyclical weakness in the dollar, of course, because the tariffs affect the U.S. economy to some extent more than other economies, simply because all U.S. imports are now being tariffed and therefore all U.S. exports as well. But I don't think we're at a real inflection point in terms of the dollar's role in global finance.
Some have suggested, though, that the dollar is still overvalued at current levels. What's fair value? Is there a way of assessing that?
No, there are certainly many models, including those that Tim alluded to. And market sentiment, of course, is a crucial driver as well in terms of short-term flows. And as we know from many historical episodes, exchange markets typically tend to overshoot in one direction or the other. So the appreciation of the dollar in the fall of 2024, when the U.S. economy was doing well and the rest of the world seemed to be in shambles, was perhaps an overreaction in terms of the dollar appreciation. And then when the tariffs came along, the rest of the world was going to take a hit, but the U.S. economy in relative terms looked like it was going to take a much bigger hit. Rather than the soft landing, which seemed very much in sight at that time, the prospects of a recession increased greatly. So in relative terms, the tariffs have taken a much bigger toll on U.S. economic prospects than on the rest of the world's prospects. So we've seen a huge swing back in the dollar. I'm an academic economist, so I don't forecast what happens to exchange rates, but certainly one can see there are reasons why the dollar might have a little room to fall further.
Tim can make some of the forecast. Tim, you know, it's still too early to see who the winners and losers are, but already we have our colleagues in Japan saying, you know what, given the ruling, that some of the plays in Japan, like Komatsu and Kubota, may be among the winners. They're among the companies that will gain from this ruling. Is there a sense of how you can position to capitalize on this ruling?
Well, you can definitely connect the dots from the broader economic picture to what that means for markets, and obviously that's what I spend a great deal of my time doing. To key off your question on Japan, the rough rule of thumb that we've established through empirical evidence is that every 10-point move in U.S. dollar JPY on an annual average basis maps onto about a 4% impact on profits. So, for example, when all the tariff news really blew up a month or so ago, and we were expecting more of a decline in the dollar and an appreciation correspondingly in the yen, we changed our baseline forecast for Japanese profits this year from 155 to 145 on U.S. dollar JPY, and that took about 4% off our profit forecast. So, and of course, the market has moved roughly in that direction. So, you know, to your question, if we see a relief rally in JPY, which you're seeing today, getting back up above 145, you know, the immediate flow through into markets is going to be to favor the exporters, which had already come under pressure. So I think we can see that passing through in a number of other markets as well, which would basically favor a recovery in the so-called global cyclical section of the market, which had been the most savaged by the downturn that we saw in April into early May.
What's the biggest risk that you see to all the predictions that you're making right now?
I mean, in a word, news flow. I mean, everything is really hostage to what the latest development is. To give you one sort of number which shows how hard we've all been working, we've revised collectively numbers about 4 times in the last 5 or 6 weeks, because you have to very rapidly adjust your forecast to the new developments in terms of the fundamental economic environment, and so and that of course is largely driven by tariff news flow, and then the ripple effects of that into our economic forecasts, and then given that reset in economic forecasts, that has implications for us in terms of how we're projecting earnings and what risk appetite is and so forth. So I think where we are right now, which is a delicate juncture, is that, as I mentioned earlier, we've seen a very rapid recovery in markets from the lows in early May. Risk appetite indicators or risk indicators such as the Global Economic Policy Uncertainty Index or the U.S. Trade Policy Uncertainty Index have come down from elevated levels, but they're still high in absolute terms. So the market has aggressively traded the improvement, the so-called second derivative in risk, that risk, which is at a very high level, has come down. But as I said, the level of it is still quite elevated, which means that markets right now seem to be pricing a more optimistic scenario, with, particularly in the U.S. equity market's case, a fairly high valuation of 22 times earnings. So in our view, that doesn't leave an enormous amount of upside valuation-wise. So on the futures level, which is about 6,000 round numbers for S&P, we've got 6,500 for our 12-month target. So that gives us, some upside, but not enormous. And therefore, a key view is you want to look underneath the surface of the market to alpha opportunities.
Eswar, as you look at developments in the world today, shall we just say goodbye to free trade, rules-based globalization?
It's going to be a very difficult time for the multilateral order, because you have one economy, the United States, that is clearly retreating from that rules-based system. It wants to essentially go it alone. It wants to set rules unilaterally, and it's demolishing institutions and a rules-based system that the United States, played a very important role in setting. Now, the conjuncture is very important at this stage, because you have on the other side another great power, China, that has emerged as a truly significant economic heavyweight. But it's not obvious that the rest of the world essentially trusts China as a partner, given the nature of its institutions. So for much of the world, it's a very difficult position, actually. And if you think about many of the middle powers like India, Indonesia, many of the countries in Asia, Latin America, Europe, and so on, these middle powers have benefited from having stable rules of the game. And you might think they could serve as balancing forces, but the reality is that they are ricocheting between one side and the other, and creating even more instability. So I think really instability to some extent is going to become the norm, and so is uncertainty. Now, households, businesses hate uncertainty, but the question is, how do they adapt to it?
As well, I just want to get your thoughts as well on the visas for Chinese as well as Hong Kong students. I mean, what do you make of that? What are the implications?
It's an extraordinarily worrying trend. I mean, I teach at a university, and we have a large number of international students at Cornell University, both undergraduates and graduates, and they bring a great deal of intellectual vibrancy, different perspectives to the atmosphere at Cornell. And I think one of the great strengths of the U.S. is, of course, the university system. We've got a lot of very good research going on here, path-breaking findings coming out of this research that are important, not just in economics and finance, but in health and many other fields. And I think this is going to have a really chilling effect on how international students and all the brain power they bring with them view the U.S., and it's going to hurt our university system.
And Tim, you were an exchange student in Hong Kong. How do you view this?
I would very much agree with what Eswar Prasad said, that one of the U.S. great strengths has been its educational system. It's a global export. So first of all, just from a purely economic perspective, U.S. has a trade deficit, but it's also got a very significant services trade surplus, which universities contribute to. So that's, from an economic standpoint, that it's a loss. I think even more importantly is that it's, I think, beyond debate that the key competitive advantage in the 21st century is really intellectual capital and the developments that are taking place as a consequence of that. And universities play a great and significant role in this fundamental research. So if there's a strong competition across all domains, AI, advanced manufacturing, biotechnology, et cetera, if you start to cut off some of the flow of talent that's driving that innovation, that is something which is concerning for longer-term competitive dynamics.
Tim, hang tight. Eswar Prasad of Cornell University, Tim Moe of Goldman Sachs, sticking around. Thank you for your thoughts so far. Plenty more ahead. Keep it here with us. This is Bloomberg. In the market, China trending higher in line with the rest of the region on the back of that court ruling in the U.S. deeming Trump tariffs illegal. CSI 300 index up 0.7% off session highs, though. We have HSTech up by more than 1%. Still to come, our conversation with NVIDIA CEO Jen-Hsun after the chip-making giant posted an upbeat sales forecast despite new export restrictions to China. This is Bloomberg. Welcome back. You're watching Insight. Here's a quick look at where the broader markets stand as Japanese markets are set to come back online in around 20 seconds. Bear in mind, of course, markets pretty much lifted in sentiment on the back of that ruling out of the U.S. deeming Trump's tariffs illegal, with the MSCI Asia-Pac index currently up by 0.6%. Take a look where the U.S. dollar is right now. The dollar index up by about 0.2%. The question is really whether dollar trajectory changes from here, and there's a sense in the market that it is looking to weaken for the rest of the year. CSI 300 index in the positive as well, up 0.7%. We have Japan back in play, back from lunch. This is how it's looking for the Nikkei 225. It is higher by 1.7%. We have to talk about NVIDIA. NVIDIA shares jumped in late trade after the AI chip giant soothed investor fears about a China slowdown by delivering a solid sales forecast. CEO Jen-Hsun told us the AI computing market is still poised for exponential growth.
Well, we got a whole bunch of engines firing right now. The biggest one, of course, is the reasoning AI inference. The demand is just off the charts. You see the popularity of all these AI services now, ChatGPT, Gemini, so on and so forth, Grok. I mean, they're just doing incredibly well across the board. And all of the APIs that they serve out and all the agentic AI services that are built on top of them, they're all doing incredibly well. I think that there's just a giant breakthrough in AI's capability, and inferencing has just become a giant workload. Second, people realize that Blackwell is just a home run. NVLink 72 is a home run architecture. We designed it to be a thinking machine, a reasoning AI system. And I think people now, the confluence of the breakthrough in reasoning AI and the availability, now the emergence of Grace Blackwell NVLink 72, perfect timing. I think that's at the core, a big part of it. And the second part of it is that our supply chain is growing, and we're really ramping it up, and they're doing fantastically for us. And so all of these things are all coming together.
And so it is fair to say that some of that additional supply on Blackwell and the demand for Blackwell kind of made up for the opportunity lost in China, at least in the outlook for this current period?
Yeah, I guess so. But, you can't underestimate the importance of the China market. This is the second largest AI market. This is the home of the world's largest population of AI researchers. And we want all of the world's AI researchers and all of the world's developers to be building on American stacks. And so, irrespective of the near-term revenue success that we have, we can't ignore the fact that the Chinese market is very important.
You explained, again, in some detail, that at least in the Hopper architecture, you have engineered down to the lowest spec possible. It's not possible to do anything different with Hopper for the Chinese market. But in your consideration for a different architecture or a chip for the Chinese market, is that what we're talking about, a new design or new class? And have you made that proposal to the administration, just designing from the ground up a new chip?
We're still thinking through that. They're just the limitations are quite stringent, quite limited, if you will. H20 is as far down as we could take a Hopper. We don't know how to make it even less, and so that's really the limit. So there aren't main, the limitations are quite stringent. So we have to really think through it. Whatever we make ultimately has to add value to the market.
NVIDIA CEO Jen-Hsun speaking with Bloomberg Technology co-anchor Ed Ludlow. Well, Jen-Hsun saying Chinese rivals are filling the void left by U.S. companies' departure from that market, and that AI technology is becoming more powerful. Let's get to Goldman's Tim Mo, who is still with us. Strong words from Jen-Hsun. I'm just wondering if, NVIDIA loses, China gains.
Well, broadly, yes. But if I could, I just want to take a step back because I think the very significant growth in revenues that was just announced by NVIDIA is indicative of something that investors need to be aware of. So if you back up to the advent of DeepSeek in late January, early February, the investing narrative changed from a hardware-focused one to a software-focused one. And that favored the Chinese companies because if you look at the listed market cap and the AI-related revenues that they have, Taiwan, for example, where 75% of the market cap is some AI-related revenues, and Korea as well, which is about 50%, and Japan somewhat less, but still consequential. Those are all hardware-related revenues. Whereas for China, with companies like Tencent and Alibaba and so forth, they're much more in the software application side of things. So when the narrative shifted because of DeepSeek's breakthrough at low cost from hardware-focused training models to software-focused, what are the applications? The investment focus basically shifted from Taiwan, Korea to China, and we saw that very strong AI-driven technology rally in China. But the key point that we've been also making is that just because the focus has shifted, we think appropriately, to applications, which has benefited the China market, which are overweight, and so we're very much on board with that, it doesn't logically mean that there's going to be no demand for hardware. And I think NVIDIA's results are proof positive of that. Why? Because as Jen-Hsun just mentioned, the focus has shifted from inference and training these models. Now, the key point here is that for the more sophisticated reasoning models, the amount of computing power that they need to process a sophisticated query grows exponentially with how complicated the query that you ask is. In simple language, it means that the compute power that's needed for these models is very significant. And as they scale, because they're so popular, then you still need very large numbers of data servers to handle that. And so therefore, the demand for hardware, which obviously NVIDIA services, is going to continue to grow very, very rapidly. And that has led us to not only like the China application-oriented part of the market, but also still to like the hardware part, which is also represented by Taiwan and Korea. So both streams of that are important.
So overall, demand is expected to be higher. The question really for investors is where best to get value for money. If you take a look at NVIDIA, for instance, 1,500% increase in the last 5 years, and we talk about Chinese plays, which, there's further upside. So where best to get those gains?
Well, we think it does have to be either or. I mean, we still have an optimistic view on NVIDIA's potential. So I don't want to sort of denigrate that. What we will note is if you look at different slices of AI, and so we've got a number of ways of looking at this, whether it's the U.S.-focused companies, NVIDIA and Microsoft and so forth, and you have applications, start over, you have hardware and semiconductors, which are largely sort of Taiwan and Korea and parts of Japan. And you've got applications, which is significantly China. You've got what we call physical AI, which is robotics and the application of AI into other areas, including the AI of things and assisted driving. And you've got a related theme, which we're very, very positive on, which is the power pinch, the shortfall globally, because AI is so energy intensive that on top of a need to build out the electricity grids in many places, you get this additional upward demand wedge from AI servers. So you've got these different six components. What we can see is if you look at the price performance of those subsets relative to earnings, we saw in the U.S., for example, that to your point, the price dramatically outstripped the underlying earnings. So we had sort of a natural correction to have the market sort of let the earnings catch up with where prices were, which we've gotten to now, which suggests maybe there could be another upward leg. Where we think there's still significant opportunity, and this is part of the reason why we're focused on China, is that the application side of things, which is largely China, as I mentioned, is still, the price is still below where the underlying earnings are. We think there's still more valuation catch up. We're also very positive on the physical AI aspect, the robotics area. We've just written a big report on this, looking out till 2035 for the demand profile, which we think can grow something like 50% or more per annum. And so even though the stocks look expensive on current numbers, the very, very explosive growth rate that they're going to be experiencing gives us confidence that that's going to be an area to be focusing on as well. So we think there's a lot of different opportunities and ways to address the AI question. Some of the ones that I mentioned are what our preferences are.
How are you pricing in the risk from tariffs and policies out of the U.S. You know, you talk about how you're upbeat on Chinese applications, but these are exactly the areas that, you know, that the U.S. wants to put a lid on.
That's correct, but I think that the DeepSeek breakthrough and then others like Q&Q from Alibaba are evidence that Chinese engineers have found ways to develop models that, on objective global benchmarks across a variety of different of the subcomponents of those benchmarks, are performing at global standard. I mean, a little bit less on some or whatever, but they're still at very, very high standards. So our argument for liking some of the Chinese ecosystems, like in Alibaba and Tencent, not that I'm making a recommendation on those because I'm not permitted to do so, but to give those as examples, our argument was that, well, if you've got this significant resource, just take DeepSeek, but it's free, well then, you know, that's great, but then how do you make money off it? How do you monetize that? And our view was the answer to that is if you have a large integrated ecosystem and you add some greater functionality to that, but then you can still derive revenues through e-commerce or gaming revenues and so forth, then you can capture that enhanced functionality with the 800 million to 1 billion customers that you've got. So that seemed to us to be a good way to go from a significant development, but that's open source and free, to being able to monetize that and enhance the value of a larger system that's already in place. So that I think is what the market has looked at, and that's part of the reason why those stocks have gained 20 to 50% this year.
Tim, I know that for Goldman, there's been conviction that China is a market you want to be in for quite some time, way before everybody else, and we've seen those gains right now. I'm just wondering, how do you convince those who are still, you know, pretty hesitant to mobilize their funds in the Chinese market? What are they missing out on?
Okay, I'll give you a simplified answer because we could have a longer discussion than we have time for. But I'll give you just maybe 2 data points, if I could, just to exemplify this. One, I was just in the United States just a week or 2 ago, and many investors that I've known for a long time and who have been very structurally negative on China for understandable reasons, you know, debt, demographics, property policies, restrictive policies, et cetera, are shifting their tone and recognizing that that China is more nuanced than just saying it's all uninvestable. That yes, there are significant problems, but there also are very tangible, objective, positive developments, and that one needs to take a more nuanced view and understand that there may be opportunities even in a more challenging aggregate environment. And I think that sort of shift in mind frame is beginning to come through, and that may result in some additional demand for Chinese equities than we otherwise have had. That's point number 1. Point number 2, very topically, I was in Shanghai last week visiting the Shanghai Stock Exchange. And to give you one example, the Shanghai Stock Exchange has required all 1,600 companies that are listed to come up with action plans to pay more cash to shareholders. So far, 1,000 of those companies have responded positively. And to give you one hard data point, we looked at 6,000 Chinese companies' results for 2024. And the key metric here is that in the 5 years up until 2023, the average dividend payout ratio, the amount of dividends you're paying out relative to your income, was 32%. In 2024, that had gone up to a record high of 39%. So it's very evident that Chinese companies are paying more cash to shareholders. And if you add the newer phenomenon of buyback of stock, the total shareholder yield for China last year was 3.4%. So there's now like an actual tangible return of cash to shareholders, which is providing some sort of a floor for the market on top of whatever growth opportunities you can see. I think these are facts that are just hard to debate and give us some confidence that there is structural progress being made in terms of Chinese equities.
All right, Tim. Tim Mo, Chief APAC Regional Equity Strategist at Goldman Sachs. Thank you so much for your views. Now, Vietnamese tech tycoon Trong Chia Binh is leaning heavily on NVIDIA chips as he invests heavily in AI. His company, FPT, has interests in software, telecoms, data centers, and robotics. It's also venturing into education with the help of AI. I spoke to him for the latest episode of Latitude.
We buy machines because Jen-Hsun said every year the data for world doubling just 1 year, and therefore the world need to increase the AI computing by 2-fold or 4-fold per year. NVIDIA, they said only FPT in the world provide complete AI end-to-end solutions. And that is needed because everybody knows AI is so important.
Are you getting all your NVIDIA chips for your data centers?
Yeah,
that
really.
you need, all that you need?
Really, yeah.
And this is where those NVIDIA chips are put to work.
I got a tour of FPT's tightly controlled and very noisy Hanoi data center. This network of servers stores, processes, and distributes huge amounts of data. Demand for facilities like this is growing globally as the use of cloud computing and AI applications explodes. Until now, you always think about NVIDIA being the dominant player. You always think about the US being the dominant AI player. With DeepSeek, should you be viewing China and China's AI players differently?
Actually, not exactly this, because DeepSeek is innovation for democratizations of AI. Fundamental, still US.
On this episode of Latitude premieres at 8 p.m. Thursday, Hong Kong and Singapore time, 7 p.m. Friday if you're in New York. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back to Insight. The Bank of Korea delivered a widely expected rate cut to help buffer the export-driven economy from Trump's sweeping trade tariffs. The central bank lowered its key rate by a 0.25 percentage point and slashed its economic growth forecast to 0.8% from its earlier projection of 1.5%. The recent appreciation of the Korean won gave the central bank additional scope to resume easing without stoking inflation. Meantime, New Zealand's central bank could hold the official cash rate steady at its next policy decision in July after cutting yesterday by 25 basis points. Governor Christian Hawkesby told us that another cut is not a done deal, with external factors creating uncertainty.
The global outlook has just played a really important part in our assessment. We think New Zealand's in good shape at the moment. We have high agricultural export prices, we have interest rates that have fallen a long way, and that's really underpinning an economic recovery that we're experiencing. Facing into that is the global uncertainty, and so that played a big role in our thinking. I think for us it means a much more modest recovery than otherwise, particularly through the impact of slower global growth on demand for our goods and services overseas, but also more generally the impact of global policy uncertainty. And we think that that's going to be an important factor or drag on activity and inflation, regardless of where these tariffs land. It's just the fact that there is so much uncertainty, there is so much toing and froing that it really does erode confidence in businesses to invest.
I'm just wondering if you can tell us a little bit more about potential easing bias as well, because you say you don't have one, but at the same time, you've got updated forecasts showing the cash rate coming back to 3%, possibly even 2.75%. So can you tell us a little bit more about those forecasts?
So we have a long history of providing projections for the economy, and that includes for the official cash rate as well. What those projections are, we've revised those down from February, so reflecting that sort of weaker global demand and weaker inflation pressures here in New Zealand. As you mentioned, that track is broadly around 3%, give or take. However, we also published this time around, for the first time in 5 years, 2 different alternative scenarios, just reflecting the uncertainty and risks ahead of us, and what they show is that there are many different paths that the official cash rate could take from here, depending on how things play out internationally and domestically. But we're in a really good position to navigate those.
There's a lot of flexibility in that path forward, it seems, both with the sort of withdrawal of bias as well as the forecast. Does that mean we could, equally, depending on the data, see a pause, a hold, potentially even a hike?
The main message we were looking to get to markets was that, when we next meet in July, a further cut in the OCR is not a done deal. It's not something that's programmed in. We are we've moved a long way. We had the official cash rate up at 5.5% in last year, and we knew that we were well north of neutral settings. If neutral somewhere between 3.5 and 2.5, we're in that zone now. So we're really more in a phase where we're taking, considered steps, data dependent. The markets need to follow developments really closely to get a feel for what it means for us.
RBNZ Governor Christian Hawkesby speaking with Paul Allen and Heidi Stroutwart earlier. And in another move that could escalate tensions between the world's two biggest economies, the Trump administration will revoke visas for Chinese students and will scrutinize all future visa applications from China as well as Hong Kong. Let's bring in our China correspondent, Min Lo in Hong Kong. Min, what does this mean for Chinese students?
Yes, we have this rather sweeping statement from Secretary of State Marco Rubio saying that the U.S. is going to aggressively revoke these student visas and also revise future criteria for visa applications from China and Hong Kong. They are in particular looking at students that could have ties to the Chinese Communist Party or are studying critical subjects. And it's not clear at this point what constitutes a critical subject. And there are about more than 270,000 Chinese students that are enrolled in the U.S. last year. They are the second largest foreign student body in the U.S. after India. And it's not just these students that are going to be affected, right? Because China has a huge education consulting business. These are professional organizations that help the students study for tests and give them an overview of the education landscape in the U.S. These companies will have to pivot and figure out, how to get students maybe to apply to other countries in the UK, in Singapore and Hong Kong. Those are some other popular destinations among Chinese students, according to what one educational consultant had told us. And the big question now is what is next and whether the federal court will be able to intervene, because when it comes to Harvard, for example, the federal court was able to win the school a temporary reprieve, allowing it to continue to accept foreign students. And so still a lot of question around how this is going to be implemented and whether the courts will be able to intervene as they did with the reciprocal tariffs.
Min, we're still awaiting response from China. How might China retaliate? I mean, might China put U.S. students under scrutiny, for instance?
Yes, we haven't heard an official response, but it's quite possible we could get something this afternoon at the 3 p.m. press conference from the Foreign Ministry. It is possible that China could consider retaliating in a tit-for-tat manner, maybe also freezing visas for U.S. students wanting to come for exchanges in China, for example. But yesterday we heard the Chinese Foreign Ministry calling on the U.S. not to disrupt education and to protect the rights of these international students. And there's also questions around what is the ultimate goal for the U.S. Is this going to be an end in itself, or is it just part of, another bargaining chip to give the U.S. more leverage in its broader trade negotiations with China? So we don't really know where this will really end up, and of course, huge impact, both economic and cultural impact. It could hugely reduce the people-to-people exchanges. And bear in mind, many of these students, they typically pay full fees to U.S. universities. They are a source of revenue for the universities, which can then use those funds to provide subsidies for U.S. citizens as well.
And timing isn't great just when relations are beginning to just cool down a little. Bloomberg's China correspondent Min Lo, thank you so much for that. That is it for Inside. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.